Hello and welcome to the Weekend Investing Daily Byte of 14th of June. An exciting day today. First, a look at the disclaimer. All the securities that we are quoting are for illustration and not recommendatory. So something is happening in the auto space. You can see Mahindra and Mahindra zooming, Maruti is zooming, Tata Motors is zooming. We'll discuss this topic towards the end of the video, but I want you to guess by then what is the trigger for all this. The markets overall quite decent, I would say. Nifty still tentative, only 0.29% up, gradually making this ascent. So Nifty is not showing the kind of run that we are seeing in the rest of the market. So if Nifty is up only 0.29%, Nifty Junior is up 1.48%. And I showed you yesterday how this particular index is just catapulting to a different, pace of the race versus both are large cap names. I mean, Nifty is also large cap, Nifty Junior is also large cap, but Nifty Junior is zooming like small caps. And today also a gap up and a higher close by 1.48%. So Nifty Junior is going great guns. You also had mid caps up 1%. Again, mid caps have been going every day up, 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 up. We've been now, getting accustomed to the fact that every day you come to the market and mid caps, small caps, and Nifty Junior will be going up. Nifty will be remaining stagnant, and Bank Nifty also probably will not go anywhere. That has become the theme of the markets every day. Again, as I mentioned, 0.86% on the small caps. Yes, there will be some day of correction, that is fine, but you can't live in fear of that day to day. So, whatever has happened in the past is in the past. You draw learnings from that. You go as per your plan. Whatever happens in the future happens in the future. I mean, you can't ruin the peace of your current day because of that fear. And that is what is happening in most portfolios. People are not able to allocate to the market because they think the market is very expensive. And the market has been expensive for a significant period of time. If the market price earnings, let's say, is at 22 times today, even at 18 times, it was looking expensive, 19 times, 20 times, 21, 22, and 2 years back, 1.5 years back, it had reached even 30 times. So all this is essentially noise. What you have to see is where is the liquidity flowing. If the liquidity is coming to stocks, we buy stocks. If the liquidity is getting out of stocks, we sell stocks. That is as simple as that. That's what you have to also follow. Bank Nifty absolutely flat, not willing to even close this gap that we have right here, not willing to go even to the exit pole high, exit pole day high. So extremely tentative on the Bank Nifty also. In terms of what the FIs and DIs are doing, so FIs yesterday uh, selling off 3,000 crores and DIs also selling 500 crores. This is a rare day where both are selling. It doesn't happen very frequently. It happened on 4th of June and now it is happening here. You still can't draw too much inference out of it because FIIs no longer hold a significant portion of the equity. I mean, the retail now owns more than FIIs, and I'll show that in another video that I will do shortly. Today's heat maps, Nifty, the auto space had some green. You had some green in the Adani space. Some steel, cement stocks were doing well. Reliance was doing well. You had HDFC Bank doing 1%, which is quite a change. You had IT stocks taking a back seat, and the rest, FMCG, etc., were a bit muted. In terms of Nifty Next 50, much more green you can see. Again, LIC doing the heavy lifting at 6.4%. ABB and Siemens have been dramatically going up day on day basis. Trent are going up day on day basis, 4.4%. You had Varun Beverages, you had Ambuja Cement, Vedanta, ICICI Truly, you had ICICI GI, all the insurance companies going up. You had REC moving up along with HL and BEL, TVS Motors moving up. So a lot of pockets moving up in the Nifty Next 50 space. In terms of sectors, you had the auto space moving front and center, 1.3% today and 75% for the last 12 months. Public sector enterprise stocks also at 0.9%, along with consumption stocks. Real estate also moving fast, 0.8%. Metals at 0.7%. Rest were lesser in terms of gain, but all were gaining except IT stocks, which lost 0.9%. So IT in the last 3 months is still down 8.1%. IT and FMCG, along with, I would say, private banks, have been the disappointment of the last 12 months. You can see these are at low teens, whereas there are other sectors which are at, in triple digits. What kind of difference is that? Some sector is giving 11% return, and some one sector is giving 116% return. So choosing the right sector, having a strategy which lends you into the right sector at the right time is very important. Autos space up 1.3%. Just see the way autos have been going up, after it got out of this sort of a resting zone of few years. It has just gone bonkers above that. So always look for long-term breakouts of ranges for sectors and stocks. That always is a high probability, strong trending move post that. IT today minus 0.87%, although it is still consolidating within this large candle for the last 4 days. So until it breaks the bottom or the top, we still, would think that the larger trend is still up, but below this particular candle, I think the trend will start to break down. In terms of stock spotlight is on BEML. Again, the same thesis is playing out, that this uh, stock had broken out of a long-term trend in 2023-24, and that was at 1200 and 1300 level. And how quickly, and this is a log chart actually, so how quickly this has moved from 12 1300 to 4700, and today also 17% up in a single session. So a lot of times, we may think of the fact that stock has gone up too much, it will not go up any further. We draw our own sort of ceiling, that no, this cannot go beyond this. I mean, that should not be done at all. You should allow a stock to go wherever it wants to go. A 10 rupee stock can go to 10,000. Why not? Why should have this overlying sort of a bias, that no, this 10 rupee stock can only go to 20 or to 30? It could go to 500, it could go to 5,000. uh, it all depends upon how the company is doing and what kind of liquidity is flowing into that company. uh, Gold flattish, but yet I would say gradually coming out. This is going to be a huge Lakshman Rekha for gold now, around 70,000. If it breaks down, then we are going to this congestion most likely. But my sense is that we probably will hum around here till about later in the summer, and then there is a seasonal change that happens in August, September, October, where gold is usually seasonally very, very positive, and that's where we are likely to go there. Uh, Coming back to the lead story, why autos are running. So there is a new IPO alert, and auto stocks have been riding that sort of rumor in the market, and today it has been confirmed. Hyundai India is filing the DRHP with SEBI this evening. Just to give you a sense, this is last year's data, but Hyundai India is the second largest auto passenger vehicle manufacturer. So Maruti Suzuki last in FY23 had 41% market share, Hyundai had 14.6%, Tata Motors at 14%, Mahindra at 9.3%. These are the top four uh, players going forward. So whenever a large player in any industry comes to the market, it usually comes at a premium to the existing players, and all boats in that space get lifted. So not only auto stocks are getting lifted, auto ancillaries are also getting lifted alongside. So you would have seen all the auto component manufacturers are running very hard, especially the ones who supply to Hyundai India. This is the chart again. You can see here very, very clearly that in the last 14 years, Mahindra and Mahindra is up 1600%, Maruti is up 1400%, and Tata Motors is up 612%. You would not have guessed it if I had not shown you this chart. In fact, I would not also have guessed it if I had not seen this chart, that Mahindra has topped Maruti also over this period and has beaten Tata Motors by a wide margin. I mean, we are seeing Tata Motors having 70-80% dominance in EV market. They are also having JLR, which is supplying to China and world over. Yet the performance of Mahindra and Mahindra in the last 2-3 years, just look at COVID levels, it has gone up dramatically, straight up. Whereas from COVID levels, Tata Motors has not even done even half of what Mahindra has done. And Maruti has been there. But if I were to see these three charts over this 14-year period, I think the most sort of consistent performer here has been Mahindra and Mahindra, which is this white line. Yes, it did have a bad patch here, but Maruti had a huge rough patch, and Tata Motors had even a more elongated rough patch here. But since 2020, all three have been going up, and very recently, Maruti and Mahindra are really sort of going exponential. And I think the IPO of Hyundai is going to further add fuel to this fire. This is all I have for today's Daily Bite. Thank you so much for watching. Please comment below how you like this content. What are your views about the auto sector or any other sector if you like, and do subscribe to the channel. Thanks. Bye.